Now, obviously, the default on the Eurobonds is a political decision anyway, but it was unavoidable in our view because simply the servicing of the existing debt becomes so expensive at 160% of GDP. When interest rates are, where they are, obviously you can't service those debt anymore. So there's a couple of options on the table. One could be to swap existing bonds into longer dated, lower coupon bonds. Another one could be just simply a haircut on those bonds. But we think that's going to be less attractive for Lebanon because a lot of those bonds are held either by the central bank or the local banks, and about 25% is only owned by foreigners. So obviously you want to put the onus as much as possible on the foreign investors and limit the ramification for the domestic system. But obviously that's very difficult to do. And the third option, in my view, is a substantial devaluation of the Lebanese pound, which obviously the support locally isn't really there. But I think it will fix a lot of issues because around 50 billion out of the 80 billion is in Lebanese pounds of the outstanding debt. So a devaluation, or very sharp devaluation, which we already see in the parallel markets, would obviously erase some of that debt, and the servicing of that becomes more achievable.
How likely does that really look? I mean, I've had so many conversations with Riyad Salameh in the last few years. I mean, this was the man, longest serving central bank governor in the world, and he was the man that essentially kept the Lebanese pound pegged to the US dollar since the Civil War. Do we see that actually being an option for this government?
I think what's one of the options. I think already the parallel market, you can see these rates of 2,900 versus the official rate of 1,500. So already effectively is a 50% devaluation. People that were receiving, or let's say having their money in Lebanese pounds, obviously received much higher interest rates than in dollar terms. So they did take some risk having those exposures. And obviously the central bank has done what it could, right, over time by having the peg, defending that as much as it could, also trying to keep the system as much alive as possible by increasing interest rates being paid to the banks. But obviously it's something had to give without any fiscal austerity, so the system is now imploding basically.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.